Hello everyone. Hello to you all, fellow cashflow builders. Welcome to this live session. It's been about 3 weeks since I have not done a live session because around 1st April, I had to abruptly travel up to Seremban for my grandma's wake, and she lived till 100, so the wake was the dressing for the wake was interesting because we wore red colors to celebrate her long life. And it's actually coming out of content regularly. When it gets interrupted, it can be quite difficult to come back as well, right? But because of how confusing the market has been, it really motivated me to come back to do this live so that hopefully it can help you to understand what's going on in a simpler way and a clearer way as well. And of course, with what I'm sharing, this is not financial advice. It's just what I observe from the market. It is a study that I do on my own every day. And because doing it alone can be quite boring. So please, if you have something to share with me as well, please come forward, leave it in the comments down below on my Facebook or Instagram or YouTube, and then we can continue. We can further discuss what we can understand about the market as well as what we can do about our investments. So, without further ado, let's find out where the market is trending towards. So yesterday, pretty green day for technology, communication services, consumer discretionary, healthcare, and consumer staples. Energy, utilities, and real estate not so. But this is just day by day, changes going on. But what about the general sentiment, right? Like, if you are interested to stay invested for the long term, you want to hold on to your stocks, your favorite companies and such, what can you look forward to, or what are the expectations you need to manage moving forward? So I like to go on to my favorite chart, which is the volatility index. And around the end of March, it looked like it was crossing below the 20-point mark. And it's always a good sign to see the volatility index falling towards and below the 20-point mark, but it didn't sustain up. So why it's always a good sign to see that happening? Because we start to see the market recovering as investors become more confident to buy back into their favorite stocks and securities, right? Because when we see the volatility index falling, it's an indication to investors that the volume of put options in the market is reducing. And put options is, of course, reducing volume of put options in the market is always a positive sign that investors are confident that the market is going up. But it didn't stay below 20 for long, and very quickly it rose back to rose back to 30, and based on the candlestick, it even went up to 31 yesterday. So from the volatility index, looks like the general sentiment is towards bearish. It's less confident in the market moving upwards. So the other indicator that I like to use is the put call ratio. So while the volatility index might be indicating that there's an increase to put options, we also want to know whether there's an increase to call options. So for the put call ratio chart, when we see a red line, it means that there's an increase. There's more to the increase of call option than the put option being purchased in the market. So despite actually what we saw earlier in the volatility index is that it fell yesterday, still way above the 20-point mark. and as well as a indication that there's in the put call ratio that there's a reduction in the put volume of put options. No real indication whether there's an increase to the call options in the market. Of course, call options are purchased by investors when they expect the market to go upwards and they want to purchase at a discount. They want to purchase the stock while they are sleeping, right? Before the stock becomes too expensive for them to buy. So still, the put call ratio today, it's just showing that, yeah, there's a reduction in put options. And the next thing that I want to look at would be the volume of bull to bear ratio. So this here, the green is the volume of investors who are still bullish, and red are the volume is the volume of the investors that are bearish. So yeah, there's way more bearish investors than bullish investors at the moment. And this over here is the S&P 500 ETF. Overall, it's on a downtrend, looking at the 50-day and the 100-day moving average as well. So what happened was the short-term moving average went below the long-term moving average. In fact, the short-term moving average which is the 50-day moving average, going below the 100-day on the 23rd of February, and then subsequently going below a longer-term moving average, the 200-day moving average on the 14th of March, is what we know as the death cross. So when such incident happens, it is actually an indication of market slowing down, more and more investors going bearish, and once this sentiment spreads, in fact, over here you can see the 100-day moving average going below the 200-day moving average also, which is a further strengthening of the sentiment that investors are becoming bearish. Of course, another interesting thing to take note of would be the margin statistics, where the volume, or how should I say, the amount of money borrowed from the banks to buy stocks has reduced significantly. Now, to give you an idea of how this margin has an impact on why stocks are so expensive over the past, back in 2021. Look at this. When it was March 20, the beginning of the lockdown, the amount of borrowed money used to purchase stocks was 479 billion. And then money printing happened, borrowing of money became cheaper. Look, December 2020, the amount of borrowed money used to purchase stocks rose to $778 billion, subsequently rising further to $935 billion in October 2021. Any wonder why stocks became expensive? Now, ever since then, it's been reducing, and it has finally reduced to below $800 billion. So with the amount of money being pulled out of the stock market at this rate, any wonder why, the market will be trending downwards? So, during this period of time, when we see a trending of downtrend of in the market, right? What do we think about? For me, I'll just think about Great Singapore Sale, and by purchasing at dollar cost averaging, I'm able to purchase at sales at different points in time, patiently, because recently also the federal government, what are investors uncertain about, and investors don't like to stay uncertain for too long. I mean, the Ukraine-Russian war has practically no effect, not much effect on the market anymore, compared to interest rate hikes. So ever since last week, where the federal government announced another 50-point increase to interest rates, it impacted the market greatly. And now investors are just, anticipating the increase come June. So, depends on, for you as investors, be patient. And, if you have cash so that you can dollar cost average. If you don't, try to use your stop losses. See if you can free up more cash for yourself so that you can dollar cost average and purchase your favorite companies at a discount. And be patient, right? So let me know if you are also using indicators. You are using indicators that I've not spoken about as well. I don't expect myself to know everything there is to know. And I would love for you to come forward and share, because this journey, it's better when there's a community, when there's more people to talk about it with, right? So stay safe, enjoy, with the measures loosening up, please enjoy your gatherings. One of the New Year's resolution that I made was for this year is to build and reinforce relationships also. So enjoy your relationships, enjoy hanging out with your family, enjoy the mahjong sessions. We can have more than 10 now gathering together. So, in this year of aggressive volatility going on around us, let's stay in touch with the people we care for, our loved ones, and treasure them. Stay safe, stay invested. Thank you for watching this live. Take care.